Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 8th of October 2018, and we're discussing China and its supposed imminent collapse. A month ago, we produced a video entitled Emerging Market Collapse, and a week ago, one entitled China Bond Collapse and Tariffs, Influence on Gold and Silver Prices. We strongly urge you to listen to them if you haven't already done so, please. We've put links to these in the description section of this video. We covered these two subjects, albeit briefly, as we know that these have considerable influence on the short-term impact on the US dollar, and thereby on precious metal prices, including gold and silver, in addition to other commodities. However, we wish in this video to focus again on China, but from a slightly different angle. Now, you will notice on YouTube a spate of videos stating that China is about to collapse economically. Now, we are old enough and frankly experienced enough to remember 20 to 30 years ago, when China was then seen as an emerging market and was the place that unit trust and investment trust managers were encouraging investors to place their money. Then there was a blip, and the total financial annihilation of China was predicted, and so funds would exodus it. But nevertheless, it continued to grow and prosper at unbelievably high GDP rates for the following 30 years or so. Personally, as a young investment advisor, I remember advising clients to include China funds as part of an investment portfolio, as although it was high risk then, it would certainly provide significant growth potential taking the long-term view in mind, which is exactly what happened, I'm pleased to say. However, today may be somewhat different. While China was an emerging market, it presented wonderful opportunities for companies to invest in, and also to obtain or manufacture products cheaply. As it grew and became more financially sophisticated, it also became an ideal depository, or purchaser if you wish, of Western debt instruments, and especially US dollar-denominated assets and bonds. However, in recent years, China has become a threat to dollar hegemony. It now forms part of the international SDR, or special drawing rights, and is the second largest economy in the world, second to the US. And economists predict that it won't be long before it surpasses the United States. It also negotiates trading deals with other countries for commodities which do not necessarily involve the use of the dollar, which is threatening. Some simple economic background information for you. The US dollar, being the world's reserve currency, is able to be printed in unbelievably large quantities without adversely affecting the US economy through inflation, providing that inflation is exported, which is what has happened to emerging markets and to a similar extent China. Once the US is unable to export that inflation, it eventually comes back home to roost. So, if China fails to purchase more US debt, which it is slowly reducing, and other countries do similarly, the sooner that inflation returns. This is what is beginning to happen. So to counter it as best as possible, the US needs to increase interest rates, which is what we are witnessing, and also needs to try and prevent the US dollar being replaced as the international reserve currency. So any attempt to undermine it will be strongly fought. So do not think for one moment that US sanctions against Russia and trade tariffs against China and Turkey and other countries undertaking what we term dollar subterfuge is an accident. It is not. The US desperately needs to export its goods and to increase its own GDP, which is why President Trump and his administration is focusing on a high-risk, to some extent understandable, US-first economic policy, casting aside any of the political undertones and benefits associated with that. So what we are witnessing is this. Emerging markets, which took on huge amounts of US debt, cannot afford its repayment, as the dollar value has increased. Thereby, ironically, their investors are removing funds from these markets and putting them into either US treasuries or stocks, thereby shoring up the dollar further. Note, greater reliance on the dollar. And China, with the trade tariffs and their own consequential economic growth issues, are themselves printing money to shore up their own internal infrastructure, thereby reducing the value of their own currency. We are already witnessing turmoil in China's stock markets. Today, for example, China's stock markets fell more than 3.7% after the country's central bank announced measures to prop up the economy amid an ongoing trade war with the United States. Yesterday, the People's Bank of China announced it would be cutting the amount of cash that banks have to hold as reserves from October the 15th in a bid to spur investment. So, what is going to happen? Well, short term there will be turmoil. Now, China could come to the table and negotiate with the US an end to economic sanctions and tariffs and agree a further opening of its own markets. It is frightened to do this because it has seen around the world that autocratic political systems which fully open their markets eventually are toppled or dominated by capitalist interests. But perhaps more sinister than this, it is possible, and we say possible, not necessarily the case, China believes in its own supreme world economic dominance. And as tariffs will hurt the US too, believes that the US has more to lose than it does. And after all, US business, generally being responsible to shareholders, by definition have to look after short-term interests, while China prepares 25, 50 and 100-year plans. We have a definite battle going on, in our view, over economic supremacy. China is hurting and will hurt even more. However, we do not foresee its imminent collapse, but can see damage. Let us not underestimate either the damage it could do to the US and world economies. But dollar hegemony is essential to the future of US supremacy, and once this is lost, then it's all over for Western dominance, and power will shift inexorably to the East. Look out for and beware of future turmoil. It's far from over, and neither the US nor China are going to collapse tomorrow. But this will be an ongoing battle, temporarily adjusted by interim agreements. But the war is ultimately about who will control the world from 2050 onwards, the West or the East. And this is why, long term, we are confident about gold and silver prices. We hope you found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we're not qualified to give investment advice. Therefore, this and other productions must not be deemed to be given such advice and merely represent the personal views of its owners.